If you follow these rules in 2026, you will never take a random trade. This is not a strategy, but it's a rules-based machine for consistent profits in 2026. Now, in this video, I'm going to teach you everything you need to know about my strategy. From the markets, which means the pair, currency pair I trade, and the time frames, the section and the timing, the directional bias, the setup and the entry model, my risk management, and also my trade management. Also again, my rules and discipline. Then my journaling and review. These are 8 points of things that I am going to be teaching you in this video. So sit back and let's enjoy. Now the first one I'm talking about is the market and the time frame. Now the best market that I normally use, is GBP JPY. GBP JPY, let's look for it. Why did I choose GBP JPY? GBP JPY stands for Great British Pound vs Japanese Yen. I normally love GBP USD, but because of too much of news and what Trump have been doing there, it has been affecting lately. So I would prefer to go for GBP JPY. That's why I'm choosing GBP JPY. And the best time frame I used to trade with is the 4-hour time frame slash the 15 minutes time frame. You all know the drill. You all know my strategy. We don't make anything hard here. We keep it simple. Even a beginner, once seeing the setup, we understand how we get the setup. My time frame is 4-hour time frame and the what time frame and the 15 minutes time frame. Now, the section and timing. We trade only London section and New York section. These are the best sections to trade. And the best days are from Tuesday to Thursday are the best. I don't say you don't trade on Mondays or you don't trade on Fridays, but the best day that we do trade is from Tuesday to Thursday. And again, I used to avoid high impact news except I want to trade fundamentals. But if I don't want to trade fundamentals, I used to avoid high impact news like mad. Now, the directional bias. First of all, let me show you guys something. Let me use an illustration and do this for you guys. First of all, you go to your 4-hour time frame like this. You go to your 4-hour time frame. If you're already in your 4-hour time frame, what are you going to be looking for? You're going to be looking for your directional bias, which means your structure. Where is the market going to? Where is the market coming from? And where is the market now? The correct structure of the market. This is GJ. We're taking everything out from it. So now, the 4-hour time frame, and we have a market condition like this. I want you guys to answer this question. Which market condition is this? Which market condition is this? Are we bearish or are we bullish? If you say you're bullish, you're wrong. If you say you're bearish, you're correct. The market is in a bearish movement, in a bearish form, which means we are creating a series of higher lows and lower low. Higher lows and lower low. Higher lows and lower low. Let me set this thing to a pointer. Yeah. Higher lows and lower low. higher lows and lower lows. So higher lows and lower low. Therefore, we're in a bearish movement. Now, after identifying this particular bearish movement, what next? Do we sit back and be watching the market? No. We prepare. We start creating traps that we pray the market is going to fall into. Traps like this, you mark out your order block, the order block that causes this particular break of structure. Remember, I've taught you guys so many things you need to know about order blocks, so go and learn from my previous video. After marking out this order block, what else did we need? Everything is happening in our 4-hour time frame. You understand? Everything is happening in our 4-hour time frame. What else do we need? We need liquidity. We need liquidity. How are we going to get our liquidity? Is it from the 4-hour time frame or from the 15 minutes time frame? If it's on the 4-hour time frame, you're 50% correct. But if it is from the 15 minutes time frame, you're 90% correct. We are going to go down to a 15-minute time frame and we are going to get our liquidity. Now, what is liquidity? You guys already know what I mean by liquidity, where money lies. I've taught you guys about liquidity. So this is it. Price should go up like this and create liquidity. Create liquidity. Let's take this. So this is not the perfect drawing that I need. This we serve as our liquidity. How? Because of this double top there. So that will serve as our liquidity. Money is resting above these two sides. Money is resting there. So your entry, how are we going to enter this market after seeing everything like this? If you guess your entry to be here, you are correct. After seeing liquidity, price will now do what? Price will sweep this liquidity and hit your entry point and start selling. Do you understand? So we have trade management. Trade management means an aspect whereby you're going to take partial profits at first liquidity target, then you move your stop loss to break even after confirmation. You understand? So moving your stop loss to break even is one of the perfect things to do that's going to make you last. The main point is to last in the market. You understand? So if this is our TP1, our TP2, and our TP3, once price is here already, you move your stop loss down here, and when price is already in your TP2, you move your stop loss to what? To break even. Now you're risking nothing in this particular trade, only profit. You can also move your stop loss down to this particular side itself. You can move your stop loss down to this particular side there. That is also profit, you understand? Even though the market closes, you are still going to make a huge amount of profit from the market. You understand? So now we have rules and discipline. What are my rules and discipline? First of all, if there's no setup, there's no trade. Do not force the market. Do not rush the market. More setups are still coming in the future, so do not waste your money creating fake setups. No revenge trading or no over trading. You have a daily target. Once you have reached that limit for the day, or once you have reached that limit for the week, you end everything. It's either you lose. If you are lost enough for the week, you stop trading for the rest of the week. If you have won a lot from the week, you stop doing what? You stop trading for that week. And you're going to trade only when you are calm and what again? When you are calm and focused. If you are not calm and focused, leave the market. If you are confused, leave the market. If you are not serious and you know that you're not going to concentrate, leave the market. Now, always learn how to journal your trade. It is very most important. Learn how to journal your trade. If you don't know how to journal your trade, let me tell you something. Journaling helps a lot. Journaling is going to help you know when you are losing. It's going to help you know when you are in a winning streak. What are the things you are doing in a winning streak that you are not doing in a losing streak? Journaling is going to help you. Another one again is the risk management. Make sure you risk what you can afford. Yes, as in a normal day, the main percent risk for you to risk in a normal trading aspect is 1%. But you cannot just be risking 1%. You understand? You can't just be risking 1% in your $100 account, $100 account. You are risking 1%. How are you going to make it? No. So, but just risk what you can be able to afford. Your minimum risk to reward ratio should be at least 1:2. That's the minimum. It should not be smaller than that, but it can be bigger than that. Your stop loss must be technically and predefined. Always know where your stop loss is. This is our entry here. If this is our entry, why putting your stop loss below here? Why putting your stop loss below there? Let the market breathe. If this is the low, let the market breathe. Take it above. Take it above. Yes. Give it a breathing space. You can even take it above yourself. Yes. Give the market a breathing space for it to perform its thing. Price might decide to return and take out the liquidity residing in yourself before continuing going down. But your stop loss is already there, and you will be the liquidity. You understand? You will be the liquidity. Now, our entry model. True. Surely, we have seen everything. You guys understand everything I say. But as I said, for me, a price will just enter here, bam, and reach here. You start selling. That is not our entry model. That's just an illustration. Let me show you guys what I meant by entry model. This should be our entry model like this. If price should start moving to the upside, you see something like this, then we enter and we're moving down. This is our entry model. A what? A change of character to the downside. And then we're entering from the new order block that's been formed. The new order block that's been formed there, that is where we're going to be entering from. And that is it, guys. That is it, as easy as that. Let's dive into the market chart. What do we have in our Euro USD in our 4-hour time frame? Euro USD 4-hour time frame, as easy as that. You can see our latest break of structure. We are focusing more on the current market price. We are not going far. This is a break of structure to the upside. From the illustration that I taught you guys, focus more on the current situation and the current condition of the market. We are not going far. This is our break of structure to the downside, and our other block that causes the break of structure. If you look closely, you see there lies our FVG. From there, this type of FVG are almost, in fact, they are powerful. All these small type of FVGs, they are powerful. From there to there is our FVG. No, our block of structure is not. This is not our other block. This is our other block here. Thank you. This big candlestick now is the last bearish candlestick before this impulsive move happen. For all this, let me show you. before all this impulsive move happened in the market. After marking our other block and fair value gap, let's go down to our 15-minute time frame to see what we have. In our 15 minutes time frame, all these will serve as our liquidity. This is our liquidity here. This money here is our liquidity. And price already took out the liquidity. And now we are in our entry zone. If you do not master the art of entry model, you will just enter straight and you'll be risking. You'll be risking so much. You're risking so much. But with our entry zone, what are we waiting for price to do once price is already here? We need to start entering this market right now. Ladies and gentlemen, I think we need to start entering this market because price has already left us behind, giving the early money wakers their breakfast already. This is our break of structure, guys. But there's no other block. Okay. Can call this a minor. Other block. That is the idea. That's supposed to be where we're going to be entering from. The price have left us behind. Once this other block is big, you start from the window, but once it's small, you can start from the head. Our stop loss will be here. Now we're risking 10 pips. Our entry model made us to risk at least 10 pips. Of our TP should be above here. This is it, guys. This is it. But since we are late, we are going to wait for price to first of all break this place above. After breaking there, we are going to wait for a reversal to any FVG or other block. Then we are in. As easy as that. Thank you very much and see you guys in the next video.